regulations. Because they couldn't understand these new instruments. But they said, oh, well, the banks have very good risk management techniques, so we leave it to them to calculate their own risks. And you see, it wasn't only in the housing market. There were all kinds of other financial instruments. So there was not just one bubble. I describe in my book, there is the housing bubble. But this housing bubble, when that burst, that was only the detonator that exploded the bigger bubble, the super bubble, which is this 25 years of constant credit expansion, using greater and greater leverage. The amount of credit in the economy has been growing at, I don't know the exact figure, but maybe at least twice as fast as the economy itself. I think it's more like 3. And now suddenly you have a contraction of credit, and it's a sudden thing, and it's a period of great wealth destruction, and that's how these poor people in Texas suddenly find that their 401k is worthless.
So as we talk, Secretary Paulson and the government seems to be coming around to what you've been advocating, and that is taking taxpayer money, public capital, and injecting it directly into the banks. In effect, nationalizing some of these banks. Why do you think that will work when everything else has failed?
Well, unfortunately, because they are delaying it, it may not work so well, because there's a certain dynamism, and they're always behind the curve. So there are many things that they're doing now. If they had done several months ago, it would have turned things around.
This is a very gloomy assessment. You're saying that everything they're doing is coming too late? How does that ultimately play out?
No, unfortunately, that is the case. I'm quite distressed about it. I hope that eventually they'll catch up. We are determined to put the money in, not to allow the financial system to collapse. And that's the lesson we learned in the 1930s. It's an important lesson. But because we are behind the curve, the amounts get bigger and bigger. If we had understood it earlier, we could have brought it to a halt perhaps sooner. But we've got still a number of things to do. And this idea, you see, of just buying noxious instruments off the balance sheet of the banks was a non-starter. Because
but that was the idea.
But it was a wrong idea.
But this is disturbing, George. If everything we're doing keeps accelerating the downward negative feedback and isn't working, are you suggesting, can one insinuate from what you say that we're heading for 1930?
Hopefully not. But we are heading for undoubtedly very difficult times. This is the end of an era, and this is a fact.
End of an era.
At the end of an era.
Capitalism as we have known it?
No. Hopefully capitalism will survive. But the sort of period where America could actually, for instance, run ever increasing current account deficits. We could consume at the end 6.5% more than we were producing. That has come to an end.
So what do we do now?
We are probably at the height of the financial crisis. I think it can't get much worse. I think it could get a bit worse yet. But then you have the fallout in the real economy.
We're in a downward spiral.
We are in a downward spiral.
How long will it go on?
Look, the one thing that my theory says is that you can't predict the future, because the future depends on how you react to it. So if we do the right things, then things will be less painful. If we do the wrong things, they'll be more painful. Now, so far, we've been doing the wrong things. I very much hope that we'll have a different government in a few months, and they'll be doing the right things.
Well, don't be shy. What do you think the new government should do?
Well, first of all, you have to prevent housing prices from overshooting on the downside the way they overshot on the upside. You can't arrest the decline, but you can definitely slow it down by minimizing the number of foreclosures and readjusting the mortgages to reflect the ability of people to pay. So you have to renegotiate mortgages rather than foreclose. And you provide a government guarantee, but the loss has to be taken by those who hold the mortgages, not by the taxpayer.
You mean the homeowner doesn't take the loss, the
No,
lender?
no, the homeowner needs to get relief so that he pays less because he can't afford to pay it, and the value of the mortgage should not exceed the value of the house. Right now, you already have 10 million homes where you have negative equity, and before you are over, it will be more than 20 million.
You know, you're talking about taking action 3 months from now, whether it's a McCain administration or an Obama administration. What happens in these next 3 months? And I'm serious about that.
I am very worried about it, and I hope that they will have a new Secretary of the Treasury, somebody else at
Sooner than later?
I don't think it would be very helpful.
You don't think Paulson is up to it?
Unfortunately, I have a negative view of his performance. Because he represents the very kind of financial engineering that has gotten us into the trouble. And that this buying off the noxious things was...
buying the bad assets, that was his first idea.
Yeah, that was, and before that he wanted to create a super sieve, a special investment vehicle to take care of the other special investment vehicles. That didn't fly. And they are now, within a week, recognizing that they have to change and inject money into the banks, they make up for the hole in the equity, because those banks lost money and they can't make it up by taking their assets off their hand. You have to recognize the losses and replenish the equity.
Is that what you would do with the bailout money now,
yes,
right now?
Yes.
You would put it where?
Into the capital of the bank, so that the capital equity can sustain at least 12 times the amount of lending. So that's an obvious thing, and every economist agrees with this. You see, what is needed now, the bank examiners know how those banks stand, and they can say how much capital they need. And they could then raise that capital from the private market, or they could turn to this new organization and get the money from there. That would dilute the shareholders. It would hurt the shareholders
of the banks.
Of the banks, which I think Paulson wanted to avoid. He didn't want to go there, but it has to be done. But then the shareholders could be offered the right to provide the new capital. If they provide the new capital, then there is no dilution. And the rights could be traded. So if they don't have the money, other people could, the private sector could put in the money. And if the private sector is not willing to do it, then the government does it.
The assumption of everything you say is that the government is going to be a big player now